Welcome to Trading Lounge and the Australian report for the 11th of February, and starting with the ASX on the 4-hour chart. So as you know, we've been looking for wave 4 here and then going up for wave 5 and looking at 5 waves of 1, 2, 3, 4, 5. So we'd called this top in here and we're looking for an A wave, a B wave and a C wave here for wave 2, and then moving up for wave 3. So that's where we are at the moment. We're in this zigzag correction. A zigzag is normally in wave 2, which is a 5-wave structure, 3-wave structure and a 5-wave structure. So let's go in and just pick up from where we left off yesterday. So from here we're looking at 1 and 2 and 3 and 4 and 5 here for wave 1, the A wave, the B wave here, which we'll need to adjust a little bit into there, and then we're looking for this C wave coming down through here. So we can clean these up, and we can also look to technically go long above this high here. Could probably drop that down to here, and better still we would look and view this as a classic trading levels pattern on the 68.50, so the arrival, the reaction, the first high above the level, some type of ABC correction, and then we can go long from that point there. That's the safe trade to the upside. Now, with the US markets, they're also rolling over as well, and they're going into a holiday on Monday, the President's Day, and we're looking at that as basically down for wave 1 here. So we may need to call this wave 1 here, because the C wave here will be looking for 5 waves, so perhaps wave 1 here, wave 2 here, wave 3, 4 and 5 coming down into this space. Where's that 61.8% retracement level here that we normally start with? So let's just get that in here. Down into this space. Somewhere in the box. So the 6,700 is a nice number to look at. Will it go all this way down? I don't know, but that's what we're looking at. That gives us much longer leg than wave A, but that's okay because the US markets were kind of heading higher while we were heading lower here. So we're doing something a little bit different, and now we've got the US markets on the down leg. So perhaps we will do the extension, so the 61.8% of this leg here. So there's different ways to look at that, but we could, I don't know if I've got the right, okay, we could do it like that. So anyway, those levels there, that will be third wave and 261 for this one. So anyway, we'll monitor that. So the question is, do you want to short this market? So that means that we need to go in and take a closer look at this. So on the 15-minute chart maybe. So just do a bit of housework here while we're here. So I guess that sits on there. That's 5 waves up here, so that means we can short it under here. I'm assuming 1, 2, 3, 4, 5, so we can also short it under here. And if you're really keen, you could probably short it under this leg here as well on the drop there. But just be mindful of the levels, because from 6, 8 here, we've got 1, 2, and 3 here. So you're going to get a bounce off the 3 here, okay? And keep an eye on the S&P as well, because they'll be rolling over. Yeah, so that's what we can do at that point. So anyway, high risk, less high, and should be okay on that one. So you'll also use the classic trading levels pattern on the 30 there as well. So that would look like this here. Be a nice clean, if that's the 30 here, the arrival, the reaction, the first low below the level, and then retesting this and dropping. So that low is important to short on, and that low is important to short on. They're good habits to get into, you know, but you can short it earlier in a lot of cases, as long as you can short it earlier, as long as you have confidence in the, you know, what the count is and how you see it and those sorts of things. Now, of course, this could come back up a little bit higher in here as well. So it could come back up into this space here. So you've still got that entry, that entry, that entry at that point. Any of those lows are okay in shorting that. So I'll just leave that at that. That's all pretty simple. And of course, if I'm wrong, then we're going to go long above here, okay? So we need to be making money if we're wrong or right. We just need to be put the trading hat on rather than the analyst hat. So we also want to have a look at iron ore. So iron ore has pushed up a little bit, but as I mentioned before, we're probably, it may even push up a little bit higher here, but we'll also, because this hasn't really had a bit of a pullback yet, but I'll need to pull that apart as well. It could end up going much higher up here into the supply level before pulling back in here. So we may end up with a situation where we've just burned straight up through here, coming into those old highs here, and then having a corrective move there, and then pushing off from that point. But now that the main point here is that we're going to see the market go up here. We're going to see this top get taken out, and because this is a corrective pattern, yes, we could get into more problems and have all of this would be the A wave, the B wave, and the C wave. It could get really ugly, and that will just be the A wave, and we'll have some sort of B wave over here, and then a C wave down here, and then up. That's also possible as well. So we just need to be need to make you aware of the of that. But yeah, looking good. I think we're on the right track because it's looking impulsive. Do you know what I mean? Rather than a corrective pattern. So we'll just next time we'll probably have a look at this on the intraday. Should just check on China as well. Where's that Chinese market gone? I think it's just the A50. Oh, there it is. Okay, so yeah, that's pushed up. That's hit 20,000. So that will probably push a little bit higher at that point. It's just the A50 here. So I'll need to reassess all of this as well. Anyway, we're just going to see a dance across here. It's not a biggie. We'll see something across here for a while. That'll give me time to double check on all my work there. But yeah, bullish, which is good for the economy, which is good for iron ore, which we've just looked at. We should just have a quick look at copper because that should be, yeah, that's all pushing up nicely. We noted that this was corrective as well, so that's all pushing up. So we'll see that move higher. I might have to readjust this as well. I'm just wondering if this is the arrival here and the reaction in the first high above the level, and then we have a correction, and I'll need just to check to see if this is not the wave 4 sitting over here on this low here. I'll double check on that. And stock. So we know that the banks are a little bit weaker, so they're folding over here now for that. So that top can be in place here, especially if we consider wave 1 being here, how short that is. That will make that short here. But we know that the CBA is going to struggle at 90, and it's 8 or 9% of the index, so it's going to be dragging the other guys along with it to a point. So let's see how far it drops here. If it drops from this high, this low to this high here, if it drops past the 61.8%, then you know that we've got a bit of a problem. There's a gap there, so we'll probably want to see that gap. But anyway, it's doing all the right things at this point, so we'll just leave that for the time being. We want a correction here. We want to see if this is wave 3 here, and we want to see if we're going to get wave 4 in here. That's my thing, because if we get the wave 4 here, then we know that we're bullish from that point. And the way that interest rates are moving in the US, then that's certainly possible for further upside with this. It'll just be in line with interest rates going up higher here, and we'll see a dance across this level, but not just yet. So I'll just clean that up there. Yeah, anyway, I'll investigate that later. I wasn't focused on it because it wasn't going anywhere, you know. I was more interested in the commodities at this point. I don't have a bias. I'm not a long person or a short person or a particular stock person or anything. I know it's important not to get attached to markets. So yeah, what we have to watch out for here before, as I mentioned before, is that this here is an A and a B and a C wave here. So what we really want to see here is that top taken out here. That's the one that we want to see. That bar that's come down here, we want to see that taken out, because that's on the 61.8% mark. So we want to see that taken out. But we're going to see weakness over the next 3 to 4 days, I think. So let me just check on the other ones. Let's check on BHP in the US, which was up a little bit, so that's good. This is, I'm finding this one here more bullish in a way, but we still need to see it. Still need to see it higher at that point. There's a lot of change in volume here. I can see that. There's a battle going on at right on that 70 there. We want to have a look at Fortescue as well. So that's okay for the time being. That's going to come back and test that. This is rising a little bit too quick for that bullish move, possibly making it corrective. But it has gone quite high. We couldn't look at it as wave 1, 2, and 3 here. It's more, and this is wave 4 because it's moved too high. Technically it's okay, it hasn't breached wave 1's low here yet, but it's looking more impulsive, but it's not there yet. I can see 1 and 2 and 3 here. We need to come back for 4 and go up for 5. If we see that 5 wave structure there, then we're on our way. If you wanted to protect yourself, then this is the time to do it right now for that, okay, if you wanted to. And that's with all of them, by the way. And RIO, of course. So RIO can also be counted. This down here I'm looking as an ABC pattern. And the good thing about this is it's just overlapped these guys here. So that means that it's making this corrective. It doesn't mean that this can't be a larger correction here as an A wave here, a B wave here, and like an A, B, and C wave here, and then move up from that point. So if you wanted to take any profit in here as well, then that would be the place to do it. What else did I want to have a look at? Just have a look at the Australian dollar for a moment. So we're considering this as wave 1 and 2 and 3 and 4 and 5 here. So if you wanted to take a percentage here, if you're in this trade, then this would be the place to do it at right here now. Or take all profit depending on what you want to do, because we should see a retracement from here as an ABC pattern coming back at this point. Okay, I think that covers what we'd been sort of tracking a little bit. Yeah, so I'll leave it at that. Thanks for tuning in. Cheers.